Stock Play of the Day is an educational program. Any statements made by Ally Invest employees are not intended to be or should be considered investment advice, a recommendation to buy, sell, or hold a security, or a recommendation to adopt an investment strategy.
Hello and welcome to the Stock Play of the Day. Today's stock is Moderna. We're going to discuss, should we pass or should we play? Hello, my name is Brian Overby. I'm the Senior Options Analyst at Ally Invest.
And I'm Callie Cox, Senior Investment Strategist at Ally Invest.
All right, Callie, before we look at the S&P 500 index, I want to let our viewers know that we have a special event that's going to start November 30th. We're going to do the very basics of options. We're going to start with the fundamentals, talk about the vernacular of the options marketplace, and it's going to be a 3-day event. So please make sure you sign up at ally.com/options for rookies. We'll put that link in the chat box as the show is going along. You can click on it and sign up and register and make sure you get all the reminders. I'll remind you of that at the end of the show, but before we get too far into it, Callie, I got the chart of the S&P 500 index up. Well, we finally got all of the moving averages in alignment. We see here we have the 200-day below the 50-day, below the 20-day. That's usually a sign of a good bullish market overall. And ever since we've had the breakout, and I think I can actually remove this line now, but that was an area that we were targeting. We've had a very solid market, especially over the last week. What do you see going on in the markets this week, Callie?
Yeah, Brian. Well, first of all, thank you for giving a little shout out to your options course. We're all very excited about it. So please sign up. Link is in the chat. Options for rookies. It's going to be a fun time. So join us. And Brian, it's a pretty exciting week in the stock market. I mean, stocks may be relatively quiet today. You know, the S&P are down around 40 basis points, but there's a lot going on. And I'll start it off with a really crazy stat. So first of all, we could be in the midst of a historic stock rally, even though stocks are down today. The S&P 500 through yesterday was up 17 of 19 days, or 17 of the past 19 days. And that's the first time that's happened since 1971. Crazy stat, quoted at parties. And the NASDAQ 100 has climbed for 11 out of the past 12 days. Not sure the last time that happened, but I bet it's pretty unusual as well. So stocks look pretty on fire these days. And if you dig down, the reopening and supply chain trade is, you know, the areas of the market leading is higher. The Philadelphia Semiconductor Index is up about 20% over the past month. The Dow Jones Transportation Average is up about 15% over that period. S&P 500 retailers are up about 13%. It sure seems like the market is over the supply chain issues and the slowing growth narrative. And it's back to believing in the business cycle again. And what's happening around the stock market is pretty interesting too. I don't want to steal Brian's fire on this, but while stocks have been climbing, 10-year yields have dropped about 25 basis points, which is not what you'd expect to see in a rising market. And people, you know, are piling back into options as well. The VIX has risen for the past 4 days, even though the S&P 500 has risen in 3 out of the past 4. That's pretty strange. Fear could be creeping back into other markets on the face, but stocks seem to be on a different track. There's a bit of a disconnect there. Now, speaking of fear and greed and sentiment and all that fun stuff, one big thing we're watching tomorrow is Rivian's IPO. Rivian, which is the electric truck maker you've probably heard about, is looking to raise almost $10 billion. And it could be one of the biggest US-based IPOs we've seen in several years. So it's very exciting, could be very historic, but it could show us a lot about sentiment these days. In the past, big IPOs have given us a good indication of the market's appetite for risk. So it'll be interesting to see how well the market digests Rivian in the days ahead, especially with all the craze around electric vehicles these days. I mean, you've seen Tesla stock, right? All right, so lots of things we're watching in the market today. Brian, tell us what you're seeing in the options world.
All right, so I'm sharing with you my VIX watch list. In the watch list, we're seeing that the S&P 500 index is down about 27 points on the day. So most of the indexes overall are down about 0.5% or so. The VIX has risen because of the downturn, and that's usually normal. We get a downturn in the marketplace, you usually see the VIX index increase in implied volatility overall. Now, the VIX does track the S&P 500 index and the options that are contained inside the SPX option chain. So with that said, Callie already mentioned a little bit that last week we had the VIX do a little bit of a run up, and there's a lot of speculation about why that was occurring. But a lot of the media has mentioned that it might be a fear of missing out. We're seeing a lot of retail investors come out and actually buy out of the money options on a lot of the major indexes. And by buying the out of the money options, they're buying the call options overall. So there's been a little bit of a skew, to use an advanced term, to a lot of the premium on buying out of the money option contracts. It's driven up the price relative to the actual movement in the index. So people are willing to pay more to try to get their hands on some of these out of the money calls. And so for the first time in a while, and I haven't really seen it kind of quoted this way, but the thinking behind the VIX and the movement to the upside is all about greed as opposed to being about fear. So a lot of people have kind of the fear of missing out. We are seeing the indexes set new highs, and they're running in and buying small lots in a lot of the major indexes. And the last one to actually pop to the upside, we talked about just a while back here on the stock play of the day, the IWM, the ETF that tracks the Russell 2000 index. We definitely had a breakout to the upside of a very long 10-month channel that it was struggling with overall. So let's just look at the futures before we talk about our stock today. If we look at the December futures contracts, we see that trading around 21. February's around 23. So we still have that angst in the marketplace going out into the new year. And I do think we saw a big infrastructure bill that came out. So we're going to get a little bit more spending overall from the government, but we still have debt ceiling issues. So that's, I think, where a little bit of the nervousness comes in going all the way out to February, seeing that VIX around 23%. Obviously in the marketplace, if we could get these futures contracts to trade below the 20 level, which I'm highlighting on the chart, I think that would be of significance to the marketplace to see some of those futures contracts come back down closer to where the spot is at. The spot is right now, or the actual VIX index is 18%. Another little interesting thing too is that last week, not only did the VIX index increase, the VVIX, which is the VIX of the VIX, actually had a little bit of a spike up too, just showing that people were willing to pay. And I'm going to put in a real quick chart before I pass it back to Callie here. You see that little spike up in the VVIX index last week relative. So just a lot of odd things. Very strong marketplace in the S&P 500 index, the NASDAQ, all of those markets were real strong last week. And we see the spike up in the options that track the VIX index and the actual spot or the actual VIX index. All right, so with that said, we're going to look at Moderna. And this chart's a little bit scary. Definitely going out on a limb here, trying to, as they say in the marketplace, a lot of times trying to catch a falling knife, if you will. If this was a cardiogram, you'd be a little bit nervous about what it's telling you right now. You'd probably be off to the hospital at this point in time. But with that being said, we're going to look at Moderna, and we're going to try to use options to manage the risk and take a small position, thinking that maybe this was overdone as far as the turn to the downside. One thing that does make you a little nervous here, Callie, is that we did blow through the 200-day moving average. And you do see this area that could act as support, but it's down a little bit further. You see you have three different touches at three different times before Moderna actually broke out. And that's we actually have a stock play of the day if you go back and look at the archives. And we talked about it right around in this area, right at the beginning of July, just in general. So a little bit long-winded, but Callie, back to you. Let's talk a little bit about the fundamentals behind Moderna.
Yeah, let's talk Moderna, Brian. I feel a little pressure to bring up some medical jokes around you, by the way, after that cardiogram comment. So I'll see what I can do. I can't promise anything, not good with puns on the fly. But let's talk Moderna. So like Brian mentioned, we actually covered Moderna in a July stock play of the day episode. I think it was July 6th, but early July when the stock was on fire. And since then, Moderna has been on a pretty wild ride. So the stock more than doubled from July to August, no big deal. And since then, it's dropped a little more than 50%. No big deal again. And that brings us to today when it's trading at about the same level as it was when we talked about it in July. So a little bit of deja vu. So we thought we'd revisit Moderna, especially given recent headlines. And considering that a good bit of Moderna's drop has happened in the past week, especially after Moderna reported third quarter earnings on November 4th. So during the earnings, Moderna did disappoint investors with its earnings commentary or its guidance, its outlook. It cut, I believe, revenue guidance for this year around its vaccine, and it offered somewhat of a lukewarm outlook for next year on demand. And obviously, the market didn't take it that well, considering Moderna's business basically is the COVID vaccine at the moment. And fast forward about a week, and Moderna is down about 30% since earnings. And you know what? There might be an opportunity here if you think the market is a little too pessimistic right now, because it is pretty darn pessimistic on Moderna at the moment. One big thing, Moderna still has the vaccine storyline going for it. It's still one of a few COVID vaccine manufacturers, and there's still a lot of demand for the vaccine, even though that demand in the market's eyes is kind of relative to expectations. It's also tough to say how much really is priced into the stock. But Moderna could benefit from the market's innovation premium for new age stocks. And right now, as Brian said, the technicals look a little crazy, but it might be time to catch that falling knife. There are risks for sure. There are risks in any investment. One big risk here is Moderna's dependency on the success of its COVID vaccine and questions around its side effects. But Brian, maybe it's time to catch a falling knife in Moderna. I want to hear what you have for us. But before I pass it over, I'm going to remind everybody to drop your questions in the chat, because Brian and I will be answering your questions live at the end of the show. Throw some brain teasers. We love hearing what you're thinking. All right, Brian, show us your trade.
All right. So I guess we'll start by just mentioning a little bit about Moderna, just in general. I think the last time around, we talked a little bit more about a longer term outlook, bought a little bit deeper in the money, went a little bit further out in time. And it was a way to participate in Moderna without putting up all the cash, because it's a fairly expensive stock, right? Right now, if we look at the option chains, we see that it's trading at $235.43. So you're talking about $23,560 to go out and buy 100 shares of it. So overall, if I'm looking at Moderna, and I'm hoping that the knife is a little bit dull that we're reaching for, one way that we can use options is we can limit our risk. Not necessarily looking for a home run. This is just in a shorter term trade that might allow you an opportunity later on to buy Moderna overall. Now, as always on the stock play of the day, nothing's meant to be a recommendation. We're trying to take one of the 40 strategies that is inside the options playbook and say, based off of these market conditions and market pricing that's going on, I might consider this strategy, okay? And then we want to take that, we want to apply it to underlying stocks that you would like to trade, that fit in your portfolio overall. So I thought about buying a little bit more out of the money option contract, just as kind of a, gee, I don't want to miss out on this trade scenario. But after looking at the implied volatilities and everything that's going on in Moderna, I think we're going to do this long call spread, which means we're going to go a little bit out of the money. We're going to cap our upside, but we have obviously increased implied volatility because of the big downturn that we've already mentioned more than once. So in this instance, we're going to be buying. We're going to go a little bit out of the money on the call side. We're going to go at about 21 days or so, give it a little bit of a chance, and we're going to buy a call option contract, then go up about 5 or 10 points and sell an option contract. And we're going to limit our downside and also limit our upside overall, but hoping we get a nice strong move back to the upside. So how does this all play out? If we look at Moderna, we're right now, the expiration that I have available is 24 days. We're going to go out to the December 3rd expiration. We have the 240 is the most at the money options. Let's see, the 235. Here's the 235. Okay. So if we just look at going out to that expiration and we say, well, if we bought the call and we bought the put, we're talking about a $35 move. So the marketplace thinks that's feasible. That means that would be sometimes referred to as the expected move in the options marketplace, but all you're looking at doing is buying the long straddle. So in this instance, if we want to just participate a little bit, we'll go on out and we're going to buy the 250 strike call well within that expected move. We want to make sure of that. And then we're going to sell the 260 strike call. So we're going to go 10 points wide. So in this instance, we have our risk reward defined here, if you will. We're going to pay $3 for the potential to make, the maximum would be $10, but overall to make $7 on the trade. 10 minus 3 would give you that maximum upside potential. So we're managing our risk, and that's one of the things about Moderna right now, and the concept of a stock that has been beaten up so hard, and as we've mentioned before, the terminology catching that falling knife. I want to make sure that this capital I'm okay with losing, and if I don't get a chance to get out, if the market does gap down and I can't get out, I'm okay with losing $3 with the potential to make $7 overall. I don't mind that risk reward because this is definitely a speculative trade. So this will be the official paper trade. I'm going to put it in the right rail, and we'll see here. We're buying to open the 250 strike call with the December 3rd expiration, selling to open the 260 strike call. We're going to do it, we'll put right at $3. The midpoint right now is $2.98. Never guaranteed a midpoint fill, but I would work this. They're very, they're fairly decent traded option contracts overall. My bid ask is a little bit wide, but doing a spread should help you out a little bit. I would hope that we could fill somewhere near to that midpoint overall. And don't forget, you got to pay commissions if you're putting this trade on. So that's going to be your max risk, $3, or for every 1-by-1 spread, $300 plus commission to put that trade on. All right. So now that is the official paper trade. I'm going to close that ticket right now, and I'm going to scroll down and we'll just look a little bit at the profit and loss graph. Now I want to highlight something. We are a little bit out of the money on this trade. What did I just do? Okay, there it is. Good. We are a little bit out of the money on this trade. And if you see the green line right here is a fairly straight line. There's not a lot of curvature in it. And that's because Moderna has a lot of implied volatility premium because of the big downturn. Here's where the underlying stock is at, that green line right there. We're hoping that it comes up in this range, and it's better that it happens closer to the expiration date. So picking this expiration date is a big deal. You want to give it enough time to bounce back. They've already announced earnings. That's what caused this big downturn. So we don't have to worry too much about the earnings, but also if it moves up too fast, too quickly, it doesn't benefit you. It doesn't behoove you as much as it would if it was closer to the expiration date. So let's knock this down and let's go just like 1 day remaining to expiration. And now you see the curvature come in on the actual option strategy. And then at expiration, that's when you can receive your maximum if you're above that 260 level. So just keep that in mind. It's part of the reason why we don't go out 45 days on a long call spread. If I was just buying the call, I would probably go 45 days. But since we're doing a spread and we got to manage the fact that the option that we're selling is working against us and the one that we're buying is helping us, that creates a situation where you want to be correct on your forecast a little closer to the expiration date overall to receive the maximum. Now, with that said, if it runs up to 260, well, oh well, we still made money on it. If it happened too fast, you're still going to be profitable on the trade overall. If it continues on up and it keeps going, well, then as you get further and further or deeper and deeper in the money, you'll see that this green line, and I'm zooming in right now, will ultimately touch the dotted line overall. So that's still a good thing. So there's two ways as expiration approaches, or as you are more and more correct on your forecast, the more reward that you're going to get on that trade overall. All right, well, I'll leave the profit and loss graph up here for right now. And Callie, chat box, do we have some questions?
Yeah, Brian, chat box. Let's see what's going on. All right, so we're getting a few highs. I see a high from William Craig, high from Zishan Nadim. Zishan actually has a question. So, oh, hi from William Mitchell as well. Hey, everybody. Hey, Zishan Nadim actually has a question, and I think it's for me. So Zishan says, hey, Callie, how does the current market trend look? And he or she says, thanks for the nice show. Thank you, Brian, too. So I'll take that question. And first of all, thank you for the thank yous. We always appreciate some viewer love. We're here for it. So current market trend. Well, obviously, like I was saying earlier, the trend is obviously very strong. It's hard to deny that right now. And we're seeing another transition into reopening stocks. And stocks that tend to do well when the supply chain is operating normally. Semiconductors, transport stocks, sectors like that, industries like that. So lots of movement going on underneath the surface, but a very strong trend above the surface. But we're thinking about a few things here. We're thinking about this strong period for stocks seasonally. This November to December period for stocks is seasonally pretty strong most of the time. And investors seem to be willing to buy dips while we climb these walls of worry. The Fed moving into tapering, the debt ceiling issue that comes up from time to time these days, political squabbles, et cetera, et cetera, et cetera. So that's encouraging too. That shows us something about sentiment. People want to be in stocks. Plus, believe it or not, we could be staring down a high growth period for the economy. And this could also be the worst it gets for inflation. If supply chain issues clear up like the market is expecting, we could see those weird quirks in inflation start to calm down a little bit. And, it looks like the market and companies and consumers are digesting inflation pretty well right now. Inflation hasn't impacted earnings too much. Demand is very strong, and the consumer is spending money pretty healthily right now. All of that, I mentioned all of that, rattle it all off, because that's all very encouraging for stocks. So strong trend right now. I will remind you, though, that pullbacks are very healthy. They happen from time to time, even in healthy markets where there's a strong economy underneath. They happen. But I mention all of this to say that, in our eyes, it's tough to see a pretty extended or pretty severe market downturn right now with so many positive trends helping us or helping the upside risk here. And we would say that upside risk is probably something to worry about more than downside risk. Are you going to miss out on this rally because you feel like it's a market top? That's something to consider. It could be more expensive to stay out of the market than be in the market at the moment. So those are a few thoughts that were, kind of bouncing around right now. I will tell you, Lindsay Bell, the chief investment strategist, writes a quarterly outlook. The last one she wrote was at the end of September, and I will drop that in the chat if you want to read more about the nitty gritty about what we're thinking about. So that's a good document to look at when we're talking about our outlook. But that's a few of our thoughts. All right, let's see what else is happening in the chat box. A few more highs. Augustine Ramirez says, hi, Brian. I should have listened to you on my trade with Tesla. So we have a little bit of capitulation. Thank you, Augustine. Ramon AR, apologies if I pronounced any of these wrong. I'm so sorry. Raman has a question. It's a fun question. He says, Brian, out of 40 strategies from the options playbook, how many do you think we've used in this show? Ballpark.
Well, yeah, with the 40 strategies, you have puts and you have calls. So there's a little less than 40 overall if you consider that they're the exact same strategies in some cases. But we've gone through almost all of them over the time in the stock play of the day. Now, recently we've done a little bit more bullish trades, and the market has been a bullish. So we haven't done a lot of bearish strategies overall, but we've talked about, even butterflies. We looked at butterflies around the FANG's earnings. We looked at a couple of those trades. So we did a few advanced trades overall, but I would say almost all of those strategies have been addressed if you're looking on the bull side of things, not necessarily on the put side.
Wow, good answer, Brian. Good answer. And I feel like we have covered quite a bit of them. During the summer, Brian and I did get a little more advanced and complex with some trades, threw out a butterfly, threw out an iron condor. So we seem to be covering them pretty well. All right, so we have one question from ASAX. Hey, ASAX. ASAX asks, hi, what are your thoughts on LCID and QS? And I'll start this off, ASAX, with saying we can't give recommendations on individual stocks. Everybody's situation is different. That's why we don't do that. So, above all, relative to everything we say today, remember that you have your own portfolio and your own goals and needs. So none of this should be taken as a recommendation. But I will throw out that LCID and QS are both electric vehicle and electric vehicle adjacent stocks. And as you probably know, electric vehicle and electric vehicle part stocks are very popular these days. I mean, I mentioned earlier that Rivian, the electric truck maker, is going to IPO tomorrow with possibly one of the biggest IPOs we've seen in recent years. So there's a lot of appetite out there for electric vehicles, and it's hard to deny that these are the future. I mean, we've seen, GM make a pledge to move toward electric vehicles. We're seeing Ford roll out electric trucks. It seems like the big automobile players are really latching onto this trend too, which is kind of a sign of legitimacy, if you will, for the space. So it's hard to really, push back on the space right now. And the stocks you mentioned are smaller players in that space. Just be very careful because it's really hard. I mentioned the innovation premium with Moderna. Obviously, the electric vehicle space is trading at higher valuations just because people are encouraged on where it could go, which is an exciting thing, but be very careful because that can disappear very, very quickly. And it's also hard. It's a little more difficult to invest in a space and really pick the players in an emerging space that will, end up with a lot of the business or with the best ideas. I mentioned GM and Ford are in the space now, and they seem to have a leg up on the smaller players. So keep all that in mind. It's a space that we're watching. It's a space that's very volatile. But you know what? If you want to invest in the future, that could be a good way to do it. All right. Oh, I see our studio manager dropped in our Outlook. So thank you, Eric, picking up my layup. We have Darren Kong asking or saying, thanks so much for doing this show. Very informative and helpful. You're welcome, Darren. We love that you're here. I think that's it, Brian. I think that's it for questions. So do you want to take us out?
Well, I'll throw a couple of comments in. Like one of the things about the EV space, they're all doing strong, but not all of them are going to make it. You just want to keep that in mind. And I go back and I think about the marijuana stocks that came out. There were quite a few that had that rallied just around news in general as the laws were changing, as what was happening in Canada. They were making it legal, the legalization of it just overall, but not all of them are still there. So that's where Callie comes in and talks about being a little bit nervous on it. A lot of these stocks, they're just concepts. They don't necessarily have earnings or have products that are out there that are being sold at this point in time. And those stocks you always want to be a little bit nervous about overall. Okay, so with that said, please sign up for my rookies course. I'm very excited to do it. I haven't done a big basic option course in years. So ally.com/options for rookies. Please sign up and you'll get all the reminders. We'll be doing it right here on the Ally YouTube channel. With that said, you can also just click subscribe and ring the bell and you'll get reminders for everything we do on the YouTube channel. And I'll see you this Friday for the stock play of the day overtime. We'll talk a little bit about how this trade is working out in Moderna. Thanks for coming, everyone.